Good evening. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 2nd of February. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I take some of what I'm doing and then for transfer to your own charts. I'm not here to issue trading signals. Right. Okay, well, we've got some news, and I've been warning about this for months, ever since Trump got elected, that we were likely to get a kind of a volatile year. He was doing various things like tariffs, his spending plans, and so on and so forth, which are liable to upset the markets. Now, sometimes these things matter and sometimes they don't. It doesn't matter. It's more about the perception of things than actually the things themselves much of the time. I mean, a good example was the war with Ukraine 2022 and actually the war in Ukraine about 2014 or whatever it was. It's one thing you noticed was that 1 week the market might be hanging on every bit of news and going up and down on it, and then 3 weeks later no one even noticed, and then it would be important again for a while, and then most of the time people would notice again. So it's all about perception. But some of the changes that Trump's looking at making are very, very big ones. Tariffs, for instance, are one of them. He's put tariffs on. I mean, Canada is a long-time NATO ally. He's been a close ally of the US since the end of World War II. Well, and before then, really. So he was refusing to rule out. When he was talking about Greenland, he was refusing to rule out military action against Denmark over wanting Greenland. And of course, that is another NATO member and long-time American ally. I think, depending on how things go in Ukraine, it's very possible that NATO might actually break up in the next year or two, as if a result which is basically a victory for Putin isn't likely to work for most of the Europeans. And I'm not sure that Trump really cares about the alliances. It's all about America first. Now, that's all well and good, but one of the reasons that America is a very, very big world leader is that since the Second World War, it has been the head of a big alliance of like-minded countries who've been backing it up. That actually could be changing over the next year or two. I think NATO could break up. Canada could be alienated. The simple reality is that, threatening your friends sometimes means they aren't your friends anymore. And that actually could bring around the multipolar world that people have been talking about for quite a while, where, America is just one big, an influential country, and other people pick their alliances mainly on the basis of what suits them. In terms of the Europeans, that would mainly be making sure the Russians get their noses noses firmly buried in the ground and staying there, because they're an existential threat, and they're going to be a major irritant as long as they have the ability to be. All right. Anyway, so what's the news affecting us today? Well, it's the news that basically Canada and Mexico are getting 25% tariffs, and that's starting on Tuesday. This took the market down basically 200 handles from 6150 area to 5950 area, and this could just be getting started, but I will talk more about this when we get onto the RTH charts. We will see, but I think I've been talking for several weeks about thinking this would be a weak first half of the year. I was thinking that we would retest the highs on NDX, stroke the Qs first, but I'm thinking that Trump may have actually pulled forward the schedule a bit, and we may be starting that now. I will be having a look at that. Honestly, the setup for reversal is pretty thin, but that's the problem with big news events. They can trigger things that were going to happen anyway later, and they just happen sooner. Okay, one last thing to mention is this is not going to be the last big news event this year. We're going to have an awful lot of news events, and some of them will be more important, and some of them will be less important, and some of them, despite being relatively unimportant, will be taken as very serious by the markets, and some of them, even though being more important, will be entirely ignored by the markets. That is the nature of the markets and the reaction to the news. But it's going to be an eventful year, and I've got various scenarios painted in for this year, but I think the thing to mention probably is that I penciled in maybe a 20% chance of a crash stroke bear market this year, and I've probably a 50% chance of a serious revolt in the bond markets, which I would have thought would be in all probability in the second half of the year, but we could see a lot of trouble in the first half of the year. After that, I would like to see new highs across the board, including crypto. But obviously, if people get upset enough and if there's enough of a bad reaction, then of course that might not happen. We will see. All right, ES getting oversold here, and we are hitting a big support level in the 59.50 area. I'll talk more about this on the RTH charts. On NQ, I was looking for a retest of the high. I was getting close to the retest of the all-time high, but at the moment it's coming back to the prior low. In fact, actually, we're not that far away on NQ to getting down to the gap down at the beginning of last week. So I'm looking at RTY again. Not too far away. This is at the moment breaking down on YM. This had a pretty good run and actually made a new all-time high. This, of course, actually, it doesn't look like it here, but I'll show you on the RTH chart. This is basically a potential level top, and on ES we got the same. These on the SPX are matching highs. And we've got two very nice looking potential level tops. And so what I'm wondering is whether we are going to start playing those out now. Now, there are various options for that too. We'll have a look at it. Okay, on DAX, we had a 60-minute sell signal, and that's likely to reach target. I would have thought at the open tomorrow, and ESTX, pretty much the same. We've got, and these aren't great double tops, potential head and shoulder patterns, but we've got a couple of sell signals, and they're likely to make target. So we will see how that goes. All right, let's have a look at the bigger picture charts. Oh, obviously the futures have opened up again, so I'm showing you the updated futures because I think it's a good interest next week. I'll be doing a post tomorrow morning talking about news and the variable impact of news and what we can expect this year, and why this year is, I've been saying for quite some time, might be a very, very volatile one, because Trump, for good or bad, is trying to lead basically a revolutionary government. He is planning to deliver revolutionary change. Revolutions do not tend to be comfortable periods. He may or may not be successful in delivering some of that change, but to the extent that he's trying, it's going to disrupt the markets. Markets do not like revolutions. So there is going to be market disruption this year, very possibly over the whole 4 years, and that's not likely to be great for markets overall. We shall see. All right, looking at the 15-minute chart, you can see we've got, hang on, I was thinking we'd retest this high here. We've got a possible nested double top, but I would have preferred it if we'd actually got up and retested 6128.18. But you can see on the hourly chart that this is the big double top and this is the smaller double top, and we're pretty close to testing the first double top support at the lows today. But I am wondering whether this might, of course, be a bull flag, and it might be. I mean, obviously, I think it does look as though Trump's serious about the tariffs, and they're going to be in place for weeks. There's going to be retaliatory tariffs from Canada and Mexico, and there's going to be a significant amount of alarm about inflation, and a possibility that this is going to widen, and tariffs are going to be used against others. Trump's also been talking about levying tariffs against the European Union, most of whom are in NATO. So it's going to be an interesting year. Personally, I'm not much of a fan of tariffs, and I don't think they'll do any good, and I think they'll just raise inflation, but what do I know? We will see. But I think one way or another, it is going to make people very concerned about these policies potentially triggering a global recession, and that is not good for markets. Okay, so here we are. We've broken this rising support, this nice looking rising channel I posted on Friday has broken. This flag had reached the target, and we may well be starting to break down. The main support I will be looking at is, of course, the daily middle band, and I've got that in the 59.79 area. If we come down, if we are still in the same area tomorrow morning or lower, we may actually find we gap through that support. At which point I'll be starting to take the larger double top pretty seriously. Now the larger double top's got they've got support in the 57.73 area. Now, of course, if you break down for a double top, that would get us back into this rising support, which I would be watching when we get there, currently at about the 57.80 area. But as and when we break down from it, of course, you have two options always. You can head down towards the target, or you can just reject it back up to the high. We could do either. We would be watching carefully for that. But if we do see a sustained breakdown and it holds it, then this is basically, we're looking at a 350-60 move down, and that would get us down into about the 54, 10 or 20 area, which could get us down into this area here, where I've got another big support level at about the 5402 area. There's a number, and I've got a further one down at 5100. Could we see a 10% decline here? Yes, we could. 5% easily. 10% definitely on the table. 20%, I'd be a bit surprised to see 10 or 20% at this stage, but possibly. But I still think if we did, we'd likely be coming back up at the end of the year, but we would see. All right, looking at the Qs. This hadn't been as strong, and I think we're likely to gap back through the daily middle band at the open tomorrow, unless we see a big recovery overnight. So I'm not seeing any particular reason to think that we would. We had got pretty close to a retest of the high. I was encouraged. I was thinking we were probably going to do that, and I think in the absence of this news, we might well have done that. But it turns out we're not going to get the opportunity, it seems, and we've got a possibility that we've got a lousy quality double top here, or we could be forming a larger flag. So if we were forming a larger flag, we could be coming down into about the 492 area. I'd like that. That would be a decent looking setup. On the 15-minute, not an awful lot to say. We do have some positive divergence on a couple of these, and actually I haven't marked it in. We've got a possible RSI 5 buy signal brewing. How seriously do I take those with big news events? Not particularly. It's the sort of thing where you can go down another 100 points. I certainly wouldn't be looking for long entries right just yet. Right, on Dire, we did have a weak RSI 5 sell signal fixed, and that's brewing, and we've now got that sell signal fixed. This had a pretty good run. It made a retest of the all-time high. We've actually got a beautiful looking potential level top here, and a sustained break below. Hang on. 418.35 would have a target down in the, where would that be? All right, about 486, 386 area. So that could get us down into this area here and almost entirely retrace the move back to the August lows. So keeping an open mind on that, not necessarily expecting that to happen, but let's face it, valuations are very rich, and we are entering a period of uncertainty. I wouldn't really be that astonished either. We will see how it goes. On the 15-minute, bit of positive divergence as well. Rising support broke, and we've got a nice looking double top here. I mentioned this on my post yesterday that if we broke below, on Friday, if we broke below 445.77, we could see a move down, which could get us into about the 441 area. And I'm thinking we may well reach that tomorrow morning. That's only a modest retracement, but I've got a possible head and shoulder neckline in the 440.54 area, and I would be keeping an eye on that. All right, let's have a look at IWM. Okay, on the IWM daily chart, we never got that far away from the daily middle band. I'm thinking we have a pretty good chance we're going to break below that again on the morning on Monday. Now, if we have a look at the hourly chart, this was the main flag I was looking at because this was the best quality flag. And this is just broken up, but you can see we formed a little double top. Sustained break below 224.58 would have a target in about the 219 area, I think, or maybe a shade below. It's so that would fill this open gap and potentially get us down below this trend line here. But I've got that in about the 217 area. All right, so we'll see how that goes. But I have to say, this has been a very heavy overnight, and this is actually some very significant news. This could cause serious disruption in the US, in Canada, in Mexico. Not really in China, because China's already had big tariffs for a while, and it's unlikely to cause much disruption there. The main thing that the Chinese are talking about is taking the US to the World Trade Organization for penalties. Don't know how seriously the US would take that, and I would have thought the process would take a while. All right, DAX, we've got a possible RSI 5 sell signal brewing, and boy, oh boy, it's come up a long way. Do we have anything like a double top on here? No, this has been on a tear. Nikkei had been struggling to get over the daily middle band, and I think we might well, we're probably going to be seeing a breakdown here too. Although, having said that, while we were doing the rally on the US indices, we weren't really seeing an awful lot of upside on Nikkei, so I'm not entirely convinced it's going to have a big impact. We shall see. All right, great. Let's have a look at the DX chart. DX. It's not actually showing the overnight here, but you can see where it's leaning towards saying tomorrow morning. We are seeing rises in the dollar, and you can actually see that on euro on the inverse. You can see this is heading straight back into the prior low. Now, this is something I've been talking about for a while, that we could see a fell directly at 110, which we still could, of course, or we could continue up into a retest of 114.75. After that, I'd be leaning bearish. From one or the other, there's a pretty good chance we're going to still be starting a fairly significant decline. It could be that we're just going to retest 110 and fell there, keeping an open mind. Really, in terms the impact this is going to have on the dollar and so on, is mainly about sentiment rather than anything else. So I was leaning towards very possibly failing this head and shoulders and heading back up into a retest of the high. I think we're going to get that. We'll see what happens then. All right, ZB. We've got a nice looking little double top here, not broken down yet. We'll see how that goes. I'm thinking there's limited further upside on ZB here, unless I'm entirely wrong on my overall read. But let's have a look at that. Okay, DX. We're still on an RSI 14 sell signal, but if we have a look at the US dollar, cash settle chart, we've got a weak RSI 14 sell signal fixed. The RSI 5 sell signals made target, and we got down, and we are holding so far the 50 DMA. And at the moment, it looks like we're going to reject back up to retest the high at 110. At that point, we've got a choice. We can either break up through and head towards the retest of the high here at 114.75, or we can head straight down. Whatever happens, I'm leaning towards seeing lower afterwards. I think there's this overall rising megaphone here. I think we are owed at some point in the not too distant future a test of this rising support trend line in the 96 area, and as and when we test that, if it breaks, then we could go a lot lower, and we're more likely to do that if we've done a retest of 114.75 yet. Otherwise, I would be wondering about ABC flag. So bigger picture, it's more bullish for the dollar if we actually fail at 110. If we go up to 114.75, and you've then got a really meaty potential double top, which could take the dollar potentially down into the 85 area, which is an area it's not really seen for 10 years, over a decade. We will see how it goes. But it's a beautiful rising megaphone here. I've been talking ever since we made this high and established this trend line about getting to the bottom trend line. On something like the dollar, obviously a move like that can take years. All right, TNX, talking about instruments where things can take years. We've got an RSI 14 sell signal fixed here on the monthly. I'm keeping an open mind about that, but I am expecting to see a retest this high here at 49.97. I would note that we've got a decent looking, it's not great, but it's not bad, a decent looking inverted head and shoulders, which is broken up with a target in the 8.1 area. Now, one of the other biggest things that can happen this year is that Trump tries to get through his spending plans, extending the tax cuts, spending in various other areas in a way that doesn't look likely to reduce the deficit particularly, and ignoring the government efficiencies things, which, I mean, might be more serious this time, but historically governments talk about efficiency a lot and don't tend to deliver a great deal. That might be different now, but we will see. But if we if spending plans, if there's an attempt to implement spending plans which are going to increase deficits, which, given that the US is now in terms of GDP, the 16th most indebted country in the world, that is, where the situation is ripe to get a bond market revolt. And the reality is, if you're going to be running big deficits, you need people to buy your bonds. If you don't have any plan for reducing the deficit and sooner or later paying them the money back, then the bond market tends to get upset. That is the circumstance under which we could make this target. And actually, this isn't an unreasonable target. This target's almost exactly at the 50% retracement of this huge bear market in bond yields and bull market in bonds that we saw between 1981 and 2020. Again, these things take decades to play out. But I was saying when we got down to this low here that I thought we were likely to be in a bull market on bond yields and a bear market in bonds for the next 10 to 20 years. We're now 5 years in, pretty much, just about. And so we are part of that process through. during that process, I wouldn't be at all surprised to see us go up to 8.1 and may well be higher. And if we have a bond market revolt, we can get that very, very, very quickly. So we will see how that goes. I've got a 50% chance of one of those penciled in for this year. We'll see. All right, on the weekly chart, not a lot to say really. On the daily chart, we've got a weak RSI 5 buy signal fix, so I think this might be bottoming out. And on the hourly chart, you can see I've got a lovely little falling wedge here, which is starting to break up. Could that wedge be a bull flag? Absolutely, it could. So we will see. This could also be a head and shoulders breaking down one way or another. This will either, I think, head up into a retest of this high here at 48.09 or a move down into the head and shoulders target in about the 42.9 area. And if the signal for which way it's going to go would either, I think, be below this support trend line here in the 44.5 area, at that stage the flag's probably dead and the head and shoulders is looking good. Or if we get over the right shoulder high here in about the 46.6 area, at which point it's all flag. And if we get back to 48.09, I think there's a pretty good chance we're going to head back up to this larger flag target in the 49.97 area, which is where I'm expecting to see a big inflection point this year. All right, CL. CL, we've got, hang on. Right, CL, we had a head and shoulders, it broke down, it's failed. This has a target back at a retest this high here in the 79.4 area, and at the moment I'm not seeing anything particularly to think that isn't going to make target. We will see. We could be forming maybe a large bull flag, but at the moment we had a nice looking head and shoulders. It broke down with a target 65 area, and that is now toast. NG, we've got a head and shoulders here too. Now we got most of the way down to the target. It might be rejecting, it might not. But certainly the tariffs is giving it a hell of a boost. I think partially because if Canada exports an awful lot of energy to the US, and if that might boost markets as energy becomes harder to get in the US, and US producers are able to charge more as a result of that. Obviously, that's not going to help inflation. Or indeed the US consumer who is hoping for lower gas prices and so on, but we will see. All right, let's have a look at those on the bigger picture charts. Right, on oil. RSI 5 buy signal brewing, the sell signal made target, and obviously on this move we could find that that breaks up tomorrow. Bigger picture, I'm keeping an open mind. This triangle, I think, for me, has likely failed. So I no longer got an open target down at 63.57. Wouldn't be that astonished to see it, but at the moment we've seen a nice retrace here. We're finding some support at the 50 DMA, and that's an obvious place to start moving up from. So we'll see. All right, NG. NG. Bigger picture. I'm liking this being a major bottom being put in, and we could have broken up for a double bottom already with a target in the 5.75 area to the 6.25 area. But I am thinking we do tend to make a significant low between like February to April. We don't do that every year, but we do it most years. And I'm wondering whether this might be the move, but that may have been derailed and support there found at the daily middle band by the tariffs. We will see. Shorter term, we do have a double top here that's broken down with a target in the 2.45 to 2.3 area, and again that might be being derailed, or this just could be a rally to go back and test the daily middle band in the 3.7 area and then fail. I'd be leaning towards the latter. As I said, there is a seasonal headwind at this time of year, which is probably going to lower, but hard to be sure, of course. All right, on GC, we've seen new all-time highs with some confidence. We've got a 60-minute sell signal fixed, and we've been doing a bit of consolidation. I'm not seeing anything that really looks bearish on the metals particularly. We've got a 60-minute sell signal here on silver that's reached a possible near miss target, but this bull flag played out like a champ. We have gone higher. Obvious bigger picture target would actually be in about the 35 area. Looking at HG. HG, we have a nice looking bull flag that's broken up. That could be failing, or we could just be retesting the low second low double bottom. Keeping an open mind on that, but I'm quite liking the metals. But if we see enough disruption of the markets, it's going to take down the others. So it all depends on how this follows through. tomorrow. Whether we get follow through to the downside or whether we make a short-term low, at the moment we don't have anything really in the way of signals, but I'm thinking if we are going to make lows, then we might have set up some decent divergence by tomorrow morning. We will see. All right, let's have a look at the bigger picture on metals. Right, GC, we've got an RSI 5 sell signal fix, not taking that particularly seriously. I would note also we've got a potential double top here, but I'm not taking that particularly seriously either. If we see a sharp decline from here, I will start to take it more seriously. But at the moment, this just looks like the kind of double top that always forms when you break a prior high. And that doesn't matter as long as you keep going. I'm thinking it might well keep going. Silver, I think this is broken up from what looks like a flag, but until we get over 33.33, this could still be a head and shoulders that's broken down with a target in the 24 area, 24.2. So I'd like to see that get over 33.33, and then we've got a clear target at a retest of 35.07. Right, palladium has broken up from a large double bottom with a target in about the 1185 to the 1215 area, and that looks nice on platinum. We have broken up from the inverted head and shoulders I drew, which again isn't bad at all, and that's really got a target. Minimum target and main target would be a retest of this high here at 1073. Actually, it's most of the way there already. I'm liking it. No current negative divergence on either. That looks nice. All right, copper. Copper. We've been testing the 50-day MA as support. I'd like to see it find some support there if it's going to continue higher, and I'm thinking it may well continue higher. We shall see. On GDX, GDX has broken up from a double bottom, looking for a retest of this high here at 43.71, and GDXJ has broken up again. I think we may well see a retest of the high at 54.18. I'm leaning towards there being more upside on the metals, and to be honest, in a period of uncertainty, historically, metals did okay. Not so sure that's going to happen with bonds this time because I think it's a different kind of uncertainty, but I don't see any particular reason why gold wouldn't do it all right. All right, let's have a look at the commodities. KC going higher. No double top here, obviously. Not really got an end point in sight, and we've gone through the target. Well, the last target, upside target we had was the retest of this high. We've gone through that and then some. SB, I think we may be forming a low here. We've got some divergence on the daily chart, which is playing out to the upside. And I'm watching this level here, just under 20, for a potential inverted head and shoulder decline on CC. CC, I rolled this into May and had a close look at it today. This looks like a bullish consolidation, but we may be forming a larger bullish consolidation, and if we are, then if that was a flag rather than a triangle, then we could get down to about the 87.50 area, and I'm wondering if we might do that. On wheat, I'm liking the upside here, and we've reached a potential inverted head and shoulder neckline. I'd love to see a right shoulder form and then it go up. On corn, we broke a lot of resistance, and the upside is open, but in the short term we had a double top, it broke down, rejected back to the high, and we've now got a potential larger double top. If we see a sustained breakdown below 477.5, then that could have a target down in about the 457 area down here. That could deliver, but I'm slightly skeptical about it getting that low. On soy, this looks like a bull flag for me at the moment. It's not a great bull flag, but it's not a bad one either. This could be the double top, but this has shown no interest in heading down below the new monthly pivot area, and we'll see. All new monthly pivots on all of these charts, by the way. And weekly pivots, and I posted those. I'm posting those on the bigger picture with this video, and I've also put them on Charting the Markets Substack as well. All right, cotton is still continuing lower. I really like a low forming here. Cotton doesn't appear to agree with me so far. Obviously, we need some more promising action. We've developed a couple of decent looking double bottoms. This was one of them, and we've just gone through them each time so far. So till that stops, we go lower. Lumber, I am wondering whether this is an overall bull flag, and we're getting pretty close to that bull flag resistance. Above the monthly pivot and the weekly pivot, the new ones at the moment. We'll see how that goes. On live cattle, leaning towards a retest of the high in not too distant future. The 60-minute sell signal has now reached the possible near miss target. So there's no particular reason to think this is going lower. HE, we've got a little double top, which is breaking down here with the target in the monthly pivot area. Not sure it's going to make it, but it might, and we've got a 60-minute sell signal supporting that. All right, great. In that case, I think that's more or less everything. We will see how this goes overnight and into tomorrow. And next week, well, that could be an interesting week, but be aware that this may well be an interesting year. And not necessarily always for the right reasons. And we might well get an awful lot of volatility from news, which I have to say I've never enjoyed because it tends to mess up good nice trades. All right, we'll see how that goes. All right, cheers. I'll catch you again on Wednesday night.